Happy Friday, traders. It's 8:02 a.m. Chicago time on Friday, the 31st of May, 2019. Welcome to the 1527th episode of the Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, you guessed it, tweet bomb got dropped yesterday right before the reopen, um, and or right after the reopen, and the tweet bomb simply was that POTUS has decided that we're going to impose this, despite this agreement that was reached, basically the NAFTA replacement. Um, POTUS is imposing a 5% tariff on all goods from Mexico. Tariffs will gradually increase until illegal immigration problem is remedied. Tariff to take effect June 10th. Tariffs to rise above 5% on July 1 and will continue until reaching 25% on October 1st. Trump threatens to increase the tariffs to 10% on July 1st, 15% August 1st, 20% August 21st, and 25% on October 1st. September 1st, it would be at 20%, 25% on October 1st. So there you have it. Our friends down in Mexico now have to deal with this immigration issue, which maybe is a good thing, but our compatriots here in the U.S. have to pay the tariff until they get their job done. So Americans will continue to pay higher prices until other countries modify their behavior, and that's how this works. In case you're wondering how these tariffs work. So that's where we are, and that caused a big splash in the U.S. In the equities markets. The S&P dropped from about 2790. We closed at 2790 50. 2790.50 yesterday was the closing price, and we dropped to 2763 or 2764. So we dropped approximately 26 points on that news, and the market made an attempt to push back, and it has continued to drop. We actually have tackled some really important stock zones or important response areas below. Um, the one thing I'm going to say, which is a bit contrarian, maybe uncharacteristic for those who've known me online for the last whatever it is, 11 years or so. Um, Watch out if you're really bearish, okay? So it would not take much for the markets to flip and turn, um, and push higher from here pretty strong. Now, a lot of people have been talking about this head and shoulders pattern across the SPX, the DAX, the whatever. And okay, patterns are patterns. But this is all, I hate to say it, I'm not trying to be political here. This is all fabricated, right? This is all fabricated, creating trade wars, creating warmongering with Iran, things like that. This is preparation for an election next year, and the incumbent in a time of crisis, the incumbent president tends to win, and so we're creating all these crises. Call me a political cynic, but if you're not a political cynic, then you're drinking a Kool-Aid, in my opinion. Again, I'm not talking politics purely here. I'm looking at, I'm sharing my political views, but I'm very pragmatic. I don't buy into the two-party system, and I don't, I'm looking at objectively at the facts, right? Just like we look at the market objectively, we don't place our bias on it, and look for confirmation. I'm looking at what is going on here and how is it impacting the market, everybody's investment and portfolio, your pension, your retirement. That's all being impacted by this action here. And what is spurring this action? several political things. But my point being, this could all flip. Um, this could all flip around real quick, right? So it would take a handshake and a news bite to change this around, and everything is tied across all macro sectors. So gold and the U.S. dollar rising and the yield curve uh, inverting, and all of that is it's all part of one piece. It is like a human body. Um, you cannot get hit by a microscopic virus that is affecting some part of your body without some systemic reaction across the body. Your white blood cells are going to go all over the place. They're not going to be localized to a specific area. They're going to go into your bloodstream and get to where they need to get to. The market's the same. It's an organism. It's a living organism. um, it's a living organism, and so all these things impact how the market responds, including the metals and everything else, the treasuries and everything else. But my point is, I've seen this many times before through George Bush, through Obama, through now President Trump, and all that. Uh, Seeing it across the board. Just be careful that you don't start drinking the Kool-Aid in that, oh my God, it's a bear market, it's over, this head and shoulders patterns breaking, blah, 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 blah. Take it one step at a time. Unless you're a macro investor, take this one step at a time, and that's what my point is. Not trying to be political here. There's no sense in speaking politics. It's like religion. Everybody has an opinion and they want to believe what they want to believe, and that's fine. I'm speaking strictly markets. And so be careful getting into this thing where it's like, oh my God, it's over. I'm just going to be a seller and I'm going to make a ton of money going short. Just trade what's in front of you. That's the bottom line of what I want to say today. Trade what's in front of you. Don't buy into what's happening um, on the Twitter or a news headline, whether it's CNN or Fox News or whatever. Just pay attention here. Pay attention to the chart and the volume attached to the chart. That's my point. Okay. So for those of you who are going to freak out and call me whatever and call me a politician or whatever and send me emails later and thumbs down or whatever, leave. I'm not interested. I'm interested in trading. You're not being objective, and the goal for us here is to be grounded and objective in what we do, and just focus on the chart is the point here. So that's that. The overall market stance this morning is completely risk off. Crude oil taking the biggest hit. Down 2.4%, trading at 55. Remember, day before yesterday closed at 59, and it's about $4 lower today. The DAX is second in line, down 208 points, 1.75%. The Euro Stoxx down 51 points, 1.54%. The S&P is actually not doing too badly. The S&P is trading just below its 1 sigma down volatility band. It's not really dramatic right now. It only got down to 2753.75. I have a stock zone at 2754 that carries over from March, and that held overnight. So that's the S&P still kind of has its head on straight and is trading methodically. The overall auction overnight was quite systematic, quite orderly in my opinion. But overall, the volatility index has shot up 5.31%. The VIX is at 18.35 on the futures. So sellers are dominating. We're opening in a gap down after 2 days of balance, which were the result of an additional gap down. We almost filled the gap yesterday at 27.99. The gap fill would have been 2850, and that's where we are. Okay, so as far as what we're looking for today, what's ahead of us? Quite a few numbers came out overnight that were a high tier. release, Japan's consumer confidence, Italy's GDP, Germany's inflation rate, the GDP growth rate in India, which was actually lower than expected, GDP out of Canada, personal spending, personal income in the US, both came in strong, 0.3% versus 0.2 on spending, 0.5 versus 0.3 on personal income. We do get Chicago PMI today, which comes out for members at 8:42 a.m. Central, 9:42 Eastern, and out to the public at 8:45. So if you see a flutter at about 9:41, 9:42 Eastern, that's the number, and I will hear it at about 9:45. We get Michigan's consumer sentiment final, which isn't too much of a mover, at 10 o'clock, Feds Williams at 12, and that brings us into the weekend. Okay, so that's where we are. In terms of our review, this is where we left it today. Yesterday, again, have you noticed that scenario two has been on point pretty much all week this week? Scenario two has been the one that has been beating out. Scenario one was looking for a drop into the point of control, the prior day's point of control, and then a push into 2800 for some chop, and then a potential push to 280550. 280550 being a key test area from below. It's a double bottom, an inter-day double bottom before, and it's expected to be tested from below and likely to hold on a first test. Didn't get there. The secondary scenario, a push to almost get us back into the prior range, and then for it to roll over through the 77 down into the 2658 quarter area. And if it continues to accelerate lower, if it takes out the prior day's low, then I was looking for 60 and 54. Does 54 sound familiar? Yes, that's today's low, overnight low. So here's what we actually got. We got a great portion of scenario two. Hang on. Yeah, we got a pretty big portion of scenario two. Scenario two, remember, was a push up, consolidate, come back down, get back down in here into the point of control, push through the 77, and then continue lower. Right? That was scenario two. And what we got is a responsive push back towards the gap fill, couldn't quite fill the gap, rolled over, came back into the point of control. The point of control tested almost to the tick right there. This is the point of control, this maroon line. Bounces back up, tries to get out of the range again, out of the prior day's range again, fails to do so, and then moves into the next stock zone at 2777. And that becomes our low for the session, finishes in the middle. The profile yesterday, we did have a neutral day and a neutral normal day, asymmetrical neutral normal day yesterday. So the market was undecided. It broke the IB high and the IB low. The probability of doing that is around 27, 28% historically. And so the market's showing some indecision, and the indecision is further exemplified by the fact that we ended up with this multi-distribution profile. The market was in price discovery mode yesterday. It had yesterday, by the way, until that tweet, the market had all the pieces in place for an afternoon strong rally. The expectation overnight is that it is likely to continue to walk higher towards 2800. And that tweet obviously shut that idea down. I love this. The people who get really nervous when you talk about politics. We're traders, people. We're very objective. Here we reopen, very, very quiet, and then boom, tweet bomb. We end up dropping fairly quickly from 27.90.50 to 27.63.50. We make a pullback. Where does it pull back to? That's right, it pulls back to the prior day's low, basically 27.76.50 to 27.76. And then we get a continuation trade. It would have been nice for it to push into the middle a little bit there, give some folks some opportunity. And it continues lower into the March 11th gap. And we have what is a bona fide or bona fide, as some people like to say, a bona fide B-shaped profile, more further long liquidation into today's action. So remember, we were at 29.50 just a few weeks ago, and here we are 200 points below that. It sounds like a lot, but on a percentage basis, really the correction is not in bear territory just yet. We've seen worse. We've seen a worse December, and the market recovered and pushed towards the all-time high, and it couldn't succeed through to pushing that high, but it got there pretty easily. I mean, it didn't take it very long to recover all that. I'm expecting more of the same. Everybody wants the market to go higher. It's it's how the system works. So this is what we have overnight. Let's take a look at Bookmap and what its indications are, what the order flow has been in this craziness. So Bookmap, you could see that the big splash down. Wow, why does it change the color of my pen here? I don't know why it does that. Toot, toot. So Bookmap, we see the big splash down, and it starts to walk itself back up. The book is mostly blank. You can see this black space here, which fills back in once I remove yesterday's some of yesterday's range. Hang on. Usually fills back in. There's quite a bit on the offer here. That's something we want to keep an eye on. There's quite a bit on the offer up above. There is a stock zone area between 27.65.50 to 27.69, and that's coinciding with quite a bit of liquidity. Let's look at the liquidity below to see where the liquidity pools are sitting. So let's remove some of that action and squish the scale. This is full depth, by the way. I'm seeing the full depth of the market. The next liquidity pool is down here at 52, and it's fairly thin below there. And that's basically what the order flow is showing currently. Quite a bit of trading going on overnight. I mean, these prints have a minimum size of 50, and for an overnight session to have so many dots, these have to have a minimum size of 50. Normally, we don't see many. Look at this. Looks like some sort of a microscopic thing. There's a lot going on here, right? There's a big fight going on here. The volume overnight's 500,000 contracts. There's a lot to contend with in terms of market participants having to reposition and actually participate in this. Again, liquidity pool at 27.52 to 50, and then below there 40 to 39. Those are the big areas below. You can see that right there. See the big pieces right there in the depth. Okay. All right. Now let's move into what we're doing today. But before we do that, it is like Friday. Please hit the like button before you leave today. If you don't see it, just go click on the YouTube link and it'll take you there. Hit the like button, please. What are we looking for today? Boy, oh boy. Now, this, of course, throws out all my homework from yesterday. Let me just shift this over. Let me look at my volatility sigma levels. So we have the first volatility band at 63, then below that at 35.50. So 35.50, okay. So what are we looking at for today? Today, we're right on top of the point of control, the overnight point of control. The profile starts to get thin somewhere in here in the overnight session. We're opening out of range. The expectation is an open auction that is reverting, that is responsive. It is likely to get tangled here and fight into this 68 area, might break higher, and then I'm looking for it to push lower, take out the overnight low, and then hold steady in here. Unless another tweet comes out or unless the Mexican government says something, I'm expecting the market to make a valiant effort at returning into the 2-day balance. Because this is 2 days of balance, I'm going to extend the profile here to see where the meat of it is. Looks like the point of control is 2784.75. Overall, I'm looking for to make an attempt higher and fail and sit sideways. Most folks are likely not going to want to hold a big position into the weekend. This is a new front in the trade war. So now we have a trade war with China. We have a trade war with Germany over cars. We have a trade war with Europe overall. And we're opening this front and we have one with Japan, and we have one now with kind of a direct shot at Mexico. And I believe most are going to go for safety, so I'm not expecting it to push back through and buy into the prior day's range. The secondary is a response that gets no participation up till 68, and then we start to trend down. And the goal, if we do, is this composite high volume node and the level that I'm looking for there is 27.35. 27.35 is the area I would look for. That is the second sigma volatility band limit or zone in this area. So I'm looking for these two. The surprise, and we always have to be prepared for this, the surprise play is what? Surprise play is initiative selling initially, and then we get an impulse up back into the prior day's range, and then we come back into balance at 84.75. And that will be scenario 3. Anyway, this was a very long one because there's a lot of action overnight. Have a great day. Remember, it's Friday. It's not smart for you to stake a good part of your account on 1 or 2 trades today. Take it easy. There's always tomorrow. The market will be here. Good luck.